If you're holding XRP, this is one of those moments where paying attention actually matters. Not because of hype, not because of price predictions, but because of something far more important: regulation. Right now, most people are focused on short-term moves, quick pumps, and trending coins. But beneath all that noise, the regulatory conversation in the United States is quietly shifting, and XRP keeps showing up right in the middle of it. For years, uncertainty has been the biggest weight on XRP. The legal battle between Ripple and the SEC created hesitation across the entire U.S. market. Institutions stayed cautious. Retail investors stayed confused, and XRP remained one of the most debated assets in crypto. But what's changed recently isn't just headlines, it's tone. Instead of constant enforcement-first messaging, regulators are now talking more about structure, clarity, and long-term frameworks. That doesn't mean everything is settled. It doesn't mean instant approval or guaranteed outcomes. But it does mean the conversation has matured. And in financial markets, mature conversations lead to serious capital. XRP was built with a very specific use case in mind: fast, low-cost, cross-border payments. That's not a meme narrative. That's infrastructure. When regulation starts focusing less on speculation and more on utility, assets with real-world use naturally stand out. And that's why XRP continues to be part of regulatory discussions, even when the market is distracted elsewhere. Another important detail most people overlook is how institutions behave. Big money doesn't chase candles. It waits for risk to decrease. Regulatory clarity doesn't create overnight pumps. What it creates is confidence, and confidence is what brings long-term players into the market. We've seen this pattern repeatedly in traditional finance. Once rules are defined, participation grows. Crypto is simply going through that same process, just in real time. Now, let me be very clear. This is not financial advice. This is not a buy or sell recommendation. This is about understanding market behavior and why certain assets stay relevant during regulatory shifts. Short-term price action will always be unpredictable, but long-term positioning is built on fundamentals, compliance discussions, and adoption potential. Another reason XRP remains part of the conversation is its global positioning. As countries modernize payment systems and explore faster settlement layers, assets that already operate efficiently at scale get attention, especially when they've survived years of legal scrutiny. At the same time, U.S. policymakers are no longer debating whether crypto should exist. They're debating how it should exist. That distinction changes everything. Markets don't react to rumors forever. Eventually, they react to structure. And structure favors assets that can operate within rules, not outside of them. This doesn't remove risk. Crypto remains volatile. Regulations can evolve. Market sentiment can change quickly. But understanding why an asset keeps appearing in serious discussions is far more valuable than chasing short-term predictions. Instead of asking how high XRP could go, a smarter question is why it continues to matter during regulatory conversations in the first place. Because in markets, relevance usually comes before results. If this kind of clear, level-headed breakdown helps you think more strategically, consider supporting the channel. And if you want updates that focus on facts, policy, and long-term narratives rather than hype, make sure you're subscribed. Stay informed, stay disciplined, and I'll see you in the next video.